program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Well, the US Federal Reserve has cut interest rates by 25 basis points as expected, but it was a divided decision.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point.
The Fed's so-called dot plots has revealed 6 policymakers wanted to no cut at this meeting, with projections showing the median policymaker sees just 1 quarter percentage point cut in 2026.
I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
Chicago Fed President Austin Goolsbee joined Kansas City Fed President Jeffrey Schmidt in arguing the policy rate should be left unchanged, while Fed Governor Stephen Miron advocated a larger half percentage point reduction.
Interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is?
So, Fed Chair Jerome Powell noting that near-term risks were tilted to the upside for inflation, but tilted to the downside for employment.
The baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%.
Well, policymakers raised their expectations for 2026 GDP growth to 2.3% from 1.8% in September, and maintain an estimate for unemployment at the end of next year at 4.4%. After the statement, traders are pricing in a 78% chance the Fed would hold rates steady in January. That's according to the latest data. US treasuries extended declines after the cut, but signalled it will likely hold off on further cuts, and the US 10-year falling to 4.16% and 2-year declining to 3.56%. Meanwhile, the Bank of Canada has left its rates on hold. Now, the US dollar lost ground against its peers immediately after that announcement. The Aussie dollar climbing to almost its highest level of the year against the greenback at close to 66.8 US cents. Well, prior to the Fed decision, global stocks were mostly higher, although the split decision appears to have created uncertainty about monetary policy. The projections and the lack of an overly hawkish tone from the statement drew US investors into the equity market, with the S&P leading the gains. And following Chair Jerome Powell's press conference, Wall Street's major indices ended high. We don't have those numbers for you, but I'll get you across what's going on. The tech and communication services proved to be the biggest drags before that Fed decision dropped, and then investors were awaiting results from Oracle, which reported after the bell. Investors anticipating strong growth amid demand for Oracle's cloud services. However, it missed Wall Street estimates for second quarter revenue, in perhaps a sign that corporate spending on its cloud services may be cooling amid broader concerns of a bubble in the AI market. Shares off more than 5.5% in extended trade. Elsewhere, shares in energy equipment maker GE Vernova surged more than 15% after forecasting higher revenue in 2026, signalling strong demand for its AI-related infrastructure. Shares of online pet retailer Chewy slumped as it forecast FY25 net sales below analyst estimates. And US-listed shares of BHP and Rio, they tracked the higher price of copper overnight. Quick check of commodities. Oil prices have risen as the US seized an oil tanker off the coast of Venezuela, adding to concerns about immediate supplies. Brent crude futures rising above $62 a barrel. Copper rose more than 0.5%. Iron ore little change at 104 US a tonne. And gold reverse course after the Fed's rate cut. Spot gold around $4,230 an ounce, and silver hitting another all-time peak at almost $62 an ounce, with the price having surged more than 110% so far this year. Bitcoin is trading at around 93,000 US dollars. Right, let's get some reaction then to what we've heard from the Fed. And joining us is Ira Epstein from Linn and Associates. Ira, welcome back. So, highly anticipated this decision, delivering a 25 basis point cut as expected. It was divided. Now, I see you make the point perhaps markets were expecting this to be a hawkish cut. What was it?
It wasn't a hawkish cut, not at all. The Fed surprised everybody by saying on December 12th they're going to begin a $40 billion a month buying of short-term treasuries. So what that is quantitative easing in some manner. I'm not saying it's the monster program we had during the pandemic, but I am saying it is quantitative easing, and it's like a child of it. That's the best word that you could say. And that was the surprise. The other surprise was when Fed Chair Powell said that the numbers are systematically wrong on labor. Where is he coming from with that? What the Fed Chair counts on, and he's been a fan of it for many, many years, has been the Beige Book. And in the Beige Book, out of the districts, we have a number of districts that have been coming out recently and saying that they're seeing weakness. I have to assume that that is where he's seeing this come from. We're going to get the jobs report next week for 2 months, and we'll get an idea. Does he know something we don't know? But he wouldn't come out and make those statements unless he knew something. So I think it's the combination of the Beige Book. I think it's the combination that they're getting an early look maybe at the BLS numbers, what the economy is going to look like on jobs. And they decided that inflation, and if we read what he said, was really the Fed didn't hit their goal because of the tariffs. But had it not been for the tariffs, that the Fed may have hit its goal. The word is may. We don't know for sure. The other part of this comes in that what is the neutral rate? So I have to think that there's room according to what we heard from Kevin Hassett say. He said there is still room to run. Now, he is the NEC, the National Economic Council head. He's obviously got the president's ear. He's widely expected to be the main choice that we get for the next Fed chair. And he is telling you there's room. 25 basis point doesn't take up that room. Maybe 75 does. So I think that's what frustrated President Trump when he came out and in the Oval Office said he should have gone 50. He didn't go 50. He blew it again, blah, blah, blah. Therefore, I think that you have to brace yourself that the dollar goes lower, that inflation stays elevated, that the Fed has turned its attention to the jobs market, and that the spread between the 2 and the 10-year notes continues to widen out, not narrow in.
So, Ira, political pressure aside, was this cut warranted given the data that you're seeing at the moment?
Well, if he knows something about labor that we don't know, absolutely it's warranted. So you have to assume that he's not guessing. He was very clear that systematically, that's his word, not mine, that the labor data is wrong, and as much as 40,000 jobs a month. So if you get 40,000 growth and you shouldn't have that, you have either no growth, or if it's a little worse than that, it's if the situation goes negative. I have to believe that it is warranted based on what he said. He knows things you don't know and I don't know.
All right. Ira, what do you make of the divisions within the Fed members there?
Did you say what I think of the decision?
The divisions between the members, obviously as a split decision.
Well, first off, he still has control of the members. You're not seeing outright dissent where they're coming out and they're criticizing him in any manner. He only has 5 more meetings. He doesn't even have to finish his tenure. He can decide to resign earlier. I think you realize that. Once we see who the next Fed chair is going to be, it's going to be 2 Fed chairs at work, because no matter what Powell does, if the nominee from the president to be the next Fed chair disagrees, the market will listen to the nominee, not what Chair Powell says. It's a strange situation, but one that the president wants to cause, because our president wants these rates down. He's not worried about inflation. He's made that very clear. He's made it very clear that he wants to make the moves on getting interest rates down and everything affordable. The problem is he's not winning on that home front. In America, the headlines are all, what does it cost to live? What's it cost to pay your car bill? What's it cost for everything? And that's becoming the issue. Housing can't be solved by the Fed. The Fed made that very clear. So there are plenty of problems in America. And frankly, I'm just more and more bearish on the dollar and more bullish on the currency markets. You see that the gold market came alive because of this. You saw the copper start this whole thing about 2 months ago, and then the silver market caught on fire as people are making sure that out of the London Metal Exchange that they have their silver bought for what they need it for. So there's lots going on behind the scenes. It's inflationary, and at the same time, jobs are in trouble. This is a difficult situation for any Fed chair.
So, Ira, how does this set up the equity market going into Christmas? Is the Santa rally on, particularly, I guess, when you look into 2026 and where rates are going?
Yeah, Santa left the building, if you will, a week ago. And today the bet was, would the market hold? Now, we get what's called the yin-yang impact after a Fed meeting. The Fed comes on with the announcement at 1 o'clock Central Time, 2 o'clock Eastern Time. What time is that in Australia, to give you an example? People are sleeping, they're just getting up. Right now they're listening to us as they're driving to work and so on. The people in Europe already left the office. Think of the 6-hour time difference. It's 8 o'clock at night or 7 o'clock at night. And you get the reaction first out of Asia, then the reaction out of Europe, and it comes back to America. So around 7 in the morning, 7:30 is when I really start paying attention to the American markets. And that's because at that point, you've digested everything. The nighttime trade, as we all know, is not the big volume trade. The big volume trade's during the day in America. So I'd be watching that in a major fashion. But I think this is very bullish, the stock market. I think for the near-term interest rates, they're going to fall. The very near term, 2 years might be too far out. I'm talking the really short term, the 30-day, the 90-day, everything the Fed really controls in a major fashion. And I think that's all bullish in the metals for that reason. Plus, no country that I'm aware of is yet biting the bullet and solving their own inflation problems. We see the spending, but where is the fiscal control? And this becomes a big issue.
Ira, great to get across your reaction. Thanks so much for joining us from Linn & Associates.
Thanks for having me.
Let's turn to the local market. We are, speaking of bullish, certainly expecting that today. We're expecting to rally on the local market. Last time I checked, in fact, we don't have those numbers up, but SPI futures are up more than 0.9%. We'll get right across the open in just a moment.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.